With Q2 of 2023 earnings wrapped up in the book of history in the stock market, are we set up to see the worst trading month of the year? Well, in today's video, we are going to be discussing just that, so that way you can be better prepared for the next trading session. Now, if you haven't already, please go ahead and subscribe to the channel. Please leave a like down below for the YouTube algorithm. And if you know anybody that would find this video useful, please go ahead and share this video. We would be greatly appreciated that you do that. Now, without further ado, let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back, and relax. Now let's get right into it. Now, as we can see, the market, historically speaking, for the S&P 500 will sell off sometime towards the second half of September. And this has done many times. This is a 20-year average of the S&P 500. And so will we see that same effect take place this time around for 2023? Well, there's things that we are going to be looking at, and we will be discussing that in this video. Now, before we get into that, what I first want to point out is how fairly well we did for Q2 of 2023. We can see that earnings season's beat rate was a 65 percentage point in terms of beat to misses. So that is pretty remarkable given the fact that, we are in a high interest rate environment where, essentially the Fed is trying to destroy demand. However, there's still a lot of spending going on, and there's still a lot of jobs that are out there. People who gotten laid off are easily able to find a new job, and so that's hence the reason why the Fed wants to keep interest rates higher for longer. And so now looking at the major economic reports, right? We've seen so far for September unemployment, which is doing pretty well. We've seen new job creations that has done pretty well as well. Now, this week for September 13, we will see the core inflation rate as well as the inflation rates month over month and year over year. And so these are the most important economic data points that we want to see take place this month. And we will also see retail sales on the 14th. This is what's going to be a little scary. We want to be watching how this will perform because obviously, as we know, there's a lot of concerns about retail theft, and what the retail industry is now calling this new term is called shrinkage. And so if you don't know what that is, definitely go ahead and take a look at what that is. There's a lot of videos out there that's happening on the West Coast, California, of people ransacking these high-end malls such as Nordstrom. So you want to see how this will report, whether or not if retail is still remaining strong. Now moving forward, the biggest event is going to be taking place 2 weeks from now, which is September 20th. Now, I've been alerting everyone on this channel that to please be prepared for this interest rate decision, which is going to be happening 11 a.m. Pacific Standard Time. As you know, I'm here in Las Vegas, and that is how I track and monitor these economic events. I just go off of Pacific Standard Time. So if you're on the East Coast, you just got to adjust it appropriately. But this is 11 a.m. Pacific Standard Time. That's going to be in the middle of the trading session on Wednesday, September 20th. So this is going to be huge. You want to be prepared for this event. I highly suggest that once this interest rate decision comes out, actually even before this, you leave some cash to the side and wait for the move after. It's better, in my opinion, to be trading that way, only because the real move really comes right after. And I highly preach that as a trader, you never want to predict, but you always want to react to whatever the market tells us to do. So that way you do not be caught up on any predictions. And if you're trying to go long the market and the market sells off even on good news, you're not caught up in all that drama, and you just keep a focused mind when it comes to trading, right? As a trader, you want to be finding the best opportunities with the highest reward to low risk, and you want to be able to be level-headed when the opportunity presents itself, you're taking action. And at that point, whenever you execute trade, all you're left to do is just manage a trade and just let the profits come in. Or if you get stopped out, you take it out because, again, trading is all about probabilities and trading is all about risk reward. And so, enough of that. Now, looking at, again, just be prepared for September 20th. That's going to be the biggest event of this month. Now let's go ahead and look at the S&P 500. Now, as we can see, the S&P 500 is currently trading in a range. Now, as I pointed out in my prior video, we've seen this crossover and much of that the market sold off to. However, we are now trading flat, but we are still above the zero line on the MACD. So when I see this setup, I am really just looking for a neutral market. I'm not looking for breakouts. I'm not looking for sell-offs, but I am looking for the extreme points of the markets. So when I see a market trade like this, I'm waiting for the market to move towards its extreme points for me to place majority of my trades, because when I see this, I'm really looking for a low risk, high reward setup. But if I am stuck in the range, I'm looking to place more of an iron condor trade strategy. But when I see the markets move to an extreme points, like for example here, the 460-ish area, or down here, which is I believe, let me clear this up here, the bottom point here, which is the 432, I'm looking for more of a dynamic style trading where if the market pulls down here, I am selling put credit spreads, and if the market trades up here, I am trading call credit spreads. But if the market is right in between, I'm looking for iron condor setups. Now, again, this is how I trade. And I'm really just looking for those types of opportunities in a flat to upwards market. Now, moving forward, looking at the triple Qs, we are seeing the exact same trade setup, right? We have this flat-ish on the MACD, yet above the zero line. So we are not seeing a complete sell-off. And again, the current price is all above these moving averages. So that's positive. And in fact, if you see here, these moving averages are on the upper slope. So we are looking at either a flat to upwards trading markets with extreme points up here at 386 and a low point of 354 for the triple Qs. And so this is really how I like to trade. I like to keep it simple, look at a few indicators to give us an idea of trend. And whenever we see the optimal opportunities to take a trade, we are looking for those types of setups where we can place trades and manage them well. And so that is what we have here for the triple Qs. Now, lastly, after I like to look at the S&P 500, and after I like to look at the triple Qs, I then like to look at the VIX, because the VIX is the most telling in terms of what the market is setting up for, because the VIX volatility is really what we can see predictive wise what the markets are really building up on the underlying instrument. So looking at here, we have the VIX. And if you've been watching my prior videos, what I was really watching out for back here in July-ish, we saw lower highs and higher highs. Now, when we saw this take place, we started to really be on our edge, that the market is really trying to make a push higher on the VIX. And if the market pushes higher, we would see a reaction on the underlying instrument, which would be S&P 500, which the VIX tracks. We would see a sell-off in the S&P 500, and we saw that take place 3 weeks in a row back here in July through August, right? So we saw this 3 week sell-off, and again, we all saw that just by watching the VIX build up momentum to squeeze higher. Now, what we can see here, which is perfect, to really give us the idea that we are going to be trading in a more sideways to up market is the fact that the VIX instrument broke down below this trend line here and is now trading below its 2 week candle low, which would be a low of 1542. And what did we see happen on Friday's trading session? Well, it went as high as 1569 and literally sold off and closed right under its opening range for the week and below this moving average on the weekly candle chart. So that is perfect in the sense that the market is slowing down its volatility because things are becoming more certain. As we know, the Fed interest rate decision that's coming up on September 20th, there's many analysts that are already predicting that the Fed is no longer going to be, well, in fact, the Fed will actually hike its last interest rate hike this month, and then it's going to hold and take a pause for the next few interest rate decisions for the year, and maybe even into next year. And if we can see that take place, that is perfect for the markets for a more normalized, more stable, more certain market, which the the underlying stock S&P 500 and QQQ, whenever there's less uncertainty, the markets like to trade higher. And so we may just see that given the fact that we are seeing low volatility on the VIX. And so, it's giving us more of an idea to understand that there's less uncertainty around the corner, and which would allow us for a new trading style, a new trading setup that we could take advantage of. And so, if we see this take place and it stays below 16, that is perfect for the markets. And we would continue to trade the market higher until we start to see some sort of euphoria where the market starts to get out of control again. And when prices get a little too high, too fast, that is when we would change up our setup and be a little more cautious and start to take hedges. But for right now, given the fact that the VIX is down below, closing at 1384, this is looking good for a healthy market to either trade sideways to the upside. And so that is what I have for you today. If you enjoyed this video, please go ahead and leave a like down below. And if you haven't already, please go ahead and subscribe to the channel. And if you know anybody that would find this video useful, please go ahead and share it. That way you and they can be better prepared for the next trading session. Again, we will see you on the next one.